Welcome back to my channel. Today in this video tutorial we'll be talking about safety trades and entry. So normally when a trader has finished analyzing his market, the best thing is to wait for a particular point for a good position, and then you take your position and then move with the market. But sometimes you find out that after our analysis, we have done the analysis and we know the direction of the market, but we don't know the particular position to wait or the particular point to take our entry. So it becomes a big problem. Sometimes you find out that you have taken a position, but immediately you take that position, the market will start moving against you and you will panic, and then you close your market with losses. Eventually the market will turn and move to your direction, and you think that Forex is a scam, but it's simply because you really don't understand what is going on in the market. Okay, for example, let me show you some of the things that the market does and you think the market is out to kill you. Now look at these points. You know that this market, let me show you. You know that this market is a reversal market and it should come down, and you have done the analysis and maybe you took your position somewhere here, you took your position somewhere here or here, as the case may be, but eventually the market will come up and maybe take you out of the market, or due to panic you close the market, and then the market will come down and start moving down, and you think that it doesn't want anyone to profit. It's simply because you don't really understand what is going on in the market. And look at it again. There are plenty things that the market does and you think it doesn't want anyone to profit in the market. Now you have taken your position somewhere here, taking your position here because you've seen a massive candle, massive sell candle, and instead of the market to go down, it has to come up first, and then before it now moves down massively. Now you thought of taking your position here for a buy, and then first of all the market has to come down and take you out. So in this video tutorial there are a lot of these things here, but in this tutorial I'm going to clear you on how to take a position after you have made a very good analysis. So we'll be talking about EMAs first. That is number one, indicator that will help you know what the market is doing. Exponential moving average. That is number one. Excuse me. And then number two is the M and W entry patterns. So that's number two things we are going to be talking about. Before the end of this video, you will understand perfectly well using this indicator and then this M and W patterns. You will make a very good safe trade and you will profit massively in the market. So let's go. Now the first one, like we said, is EMA. EMA is these lines you are seeing. You have the blue lines, you have the white lines, you have the red lines, you have the yellow lines, and then there is a blue line. Look at the blue line, and you have the blue line. These are EMAs that helps you indicate what the market is doing in the market. So let me go ahead and explain the EMAs. So the 13 periods, sorry, 13 period EMAs. 13 periods, which is, okay, let me start with 5. With 5 periods, which is the yellow EMA. You have 13 period, which is red, and then you have the blue 50 EMAs, which is blue. You have the white. When you see a white EMA in BTMM, that means you are using a white background, and if you are using a black background, when you see a white EMA, it means you are using a dark background, and if you are using a white background, it will be a black EMA. So for me, I'm using a dark background, so it is white in my chart. And then you have the 800, which is, it can be blue, dark blue, dark blue, dark blue, or purple. So these are the EMAs we use in BTMM. Now I'm going to, for the sake of this market, we'll focus more on the 13 EMA, the 50 EMA, and the 200 EMAs. Now, the 13 EMA is basically for entry. 13 EMA is basically for entry, and then the 50 EMA 50 is for pullbacks. It's for pullbacks when the market is going down. Have a pullback. The market should be able to pull back to the 50, and then the 200 EMA, the 200 EMA is for reset. It's for reset. You have peak reset or peak formation. So that is where the 200 EMA comes in. So if you stick with me till the end of this video, you will be able to understand how all these things work and then how to profit with them. Now let's go to my chart. Let me show you some of these things before we continue to the EMAs and the rest of them. Now, like I said, the 13 EMA, which is for entry, we'll come back to that later. And then look at the 50 EMA. This blue line, or you call it green line, this particular line is the 50 EMA. And what happens when the market has started moving? Now this is your peak formation. This is your peak formation, and the market moved to this point, that is pulling back to the 50, showing you that it is the first pullback. Always wait for a moving market, either moving up or moving down, to come back to the 50, provided you know that the market has not completed the cycle. I talked about market maker cycle in my previous video, so you can go ahead and check it out if you don't understand what I'm talking about. When the market has started moving, now look at the market have started moving from here. Don't jump into this market. Wait for the market to do a pullback to the 50. This pullback to the 50 is called ID50 trades. ID50 trade is the most most safest market you can take in the market. Wait for the market to do an ID50 or a pullback to the 50. Look at it. It came to this 50 EMA and immediately moves out. So you don't even have to start wasting your time, or it doesn't waste your time. It makes your market comfortable. It doesn't give you heartaches because it has done an ID50 and it is ready to move, and it moves as quickly as possible. So this is one of the safest trades you can take. Look at another ID50 pulling back to the 50 EMAs once the market has not completed its cycle. Remember, if the market has not completed its cycle, it must do an ID50, and once it does that, you enter the market and go with it. You must make sure, I emphasize on making sure, that the market has not completed its cycle. You must learn how to count your cycle. I've explained that in my previous video, so you can go ahead and check them out and then understand what a market maker cycle is all about, and then you can be able to understand this ID50. So this market has just begun. It's coming from up here, and then an ID50 occurred, and then you can look for your entry patterns using the candlestick pattern, because there is no M here. So if you understand your candlestick pattern, you can take this trade. If not, you can ignore it, and then it must complete another ID50 before a reset will occur. Now look at after this ID50, look at the reset that occurred here. Now this is one of the safest trades to take in the market. It is always there in the market. Remember, the point is to be consistent. You must not take every trade you see. Wait for the most high possibility trades in the market to be consistent. That is what matters in profit, in forex trading. Consistency in profit, that's what makes you rich in forex. So it does not matter if you think the market will go that way and it eventually went that way without completing your entry patterns. Forget about that trade. You are going to see another one that will favor you. So this ID50 is another one of the ways to take a safe trades. Look at it. It is always there in the market. Look at ID50. Look at an ID50. Look at an ID50, because it is very close, or it's touched that particular 50 EMA, so it is safe to take. It is always present. I may not take these trades. I may not take this trade because it didn't touch my ID50. I can decide to ignore it. I can also ignore this one because eventually a better one will occur in the market, and I will go with the market and make my profit. And look at, if you understand this is a peak formation. You can take this trade if you understand what happened here. So if not, you ignore it and wait for your ID50 trades. It is always present in the market. Look at it here. Take your trades and be happy with your life and make your money. Look at another ID50 here. So basically, look for your pullback to the 50. Once you have identified your pullback to the 50, the next thing is your entry pattern. Now it is not enough that you have seen your ID50. Another question is, how do you enter the trades? For example, when your ID50 happens somewhere here, let me check, give the example of ID50 that can mislead you. Now if you have an ID50, maybe this is an ID50, and for some reason you enter your market here, and then set your stop loss around here. These markets can take you out of the market, can take you out of this trade, because you entered wrongly. You entered your market wrongly. Now, how do you enter IG50? Once you have spotted your IG50 trades, the next thing is your entry pattern. That is where your M and W pattern comes in. Now, the best time frame to enter your market is the lowest time frame, which is the 15 for BTMM. The 15 time frame is the best time frame to enter your market. So when you spot an IG50 trade, it has to give you two legs of your M or two legs of your W. So this is the first M of the leg, and this is the second leg of the leg. Let me change this color. So this is your first leg of your M, and this is your second leg of your M. Now look at the M here. First and the second leg. If you mistakenly enter this first leg, you might be lucky and the market can take you all the way. But sometimes the market, before completing the second leg, it will first of all go higher than the first leg before completing the second leg, and then it will take you out of the market. So the best thing is wait for the second leg to occur. It must come. Most of the times it comes, and then you can now take your trades. Remember, I say that you take your trade in 15 minutes time frame. So let's check for 15 minutes and see. Now look at that 1 minute time frame, 1 hour time frame that we saw earlier. Now you can decide to take your trades here in the first leg, and then you go down with it. But when you see this type of reversal pattern, you may leave and then wait for it to come back again, or you can hold your breath knowing that it has done an IG50 and it will surely move downwards. So you can decide to wait, or you can leave this market alone to complete the second leg, which is this. If you allow it to complete the second leg, you will have more confidence in this trade. You will not panic, and you will be rest assured that your profit is safe, your capital is safe, and you are going to enjoy this market. Now immediately it completed this leg, it moved straight away out of that zone and goes massively downwards. So that is how to enter your trades. When you spot your IG50, you wait for an M pattern or a W pattern, depending whether it is going up or it is coming down. Now look at your M, the first M, and this first M is for the first leg in H1 time frame. Now this is the second leg. The second leg in that still H1 time frame. You should wait for this market here before you take your trade. Now, what are the things that what are the signals that you see before entering your M pattern to know that your M pattern is valid? First thing is the nadir. When this M occurred, it has to go past through this red EMA, which is the 13 EMA. The M has to touch down the 13 EMA. This is your 13 EMA. The M has to the middle of the M has to pass through this 13 EMA. So that is number one validity of this M pattern in the market. Ensure that your EMA, the 13 EMA, that the M passed through it. Look at this nadir. This is nadir. it has to pass through it or touch it very close to it before you know that yes, this M is valid. Now the second point is that you have to wait for this M to cross over this EMA. Once it closes below this 13 EMA, you can take your market somewhere here. Now look at the perfect point to take this market is here, because it has closed below the 13 EMA. The same thing happens when the market is moving upwards. You allow the W to do a nadir, and then closes above the 13 EMA. Then you are now safe to take your trades. If you use your stop loss, which is very important, you put it somewhere here. The market should be able to take you far away from that particular zone. So that is how you take your M and W entry patterns. You wait for a complete M and wait for it to close below the 13 EMA. There are plenty entries in this particular point. Look at another one. This has to close below the M, and then it also closed below this point here, and then you take your trades. If you look at different charts, you are going to see plenty of these EMAs. Remember, I said you have to ensure that your analysis is correct. Now look at another entry point, the W. Look at nadir here, and then it has closed above this 13 EMA. You are free to take this market even after this thing. It will still go up, and eventually it went up to this point. So look out for these patterns in the market, and you'll be able to profit consistently in Forex market without much losses. Not to say that losses won't come, but the profit margin will be higher than the loss margin, and that is profit in Forex market. So please guys, if this video is good, if you like it, please subscribe, hit the like button, and share this video. So the next thing we are going to talk about is the peak formation or the peak reset. Now I told you guys that one of the indicator that we use for peak formation or peak reset is the 200 EMA. This is the 200 EMA. The white EMA is the 200. It is white in my chart because I'm using a dark background. If you're using a white background, it will be a black EMA once it is a BTMM template. So the 200 is used for peak reset. Now, like I said, I've talked about counting levels in my previous video. So if you don't understand what peak reset is, kindly go back to the previous video and then check what I mean by peak resets, and then come back and you understand it better. Now, when a market has done a peak reset or a peak formation and it is about to move out, from that particular trade, always, if you are not able to follow suit, if you are not strong enough, because trading Forex is all about nerves. If you don't have the nerves to wait for peak reset or peak formation, wait for a retest in the peak formation. Wait for a retest. A retest always occur during peak formation. If you don't look closely, you will not see it. A retest always occur in peak formation. Look at this retest. Look at this retest. If you go back to the lower time frame, it is an ID 50, but not most of the time. But then it surely occurs immediately after a peak formation or a peak reset. Okay, perfect. Now look at this peak reset. Look at this peak reset. Now look at this retest that happened. This is a peak reset here. Look at this reset that happened here. If you look closely, you will see it. Look at a peak reset. Look at a retest. This is a retest. If you're not able to follow this market from this point, this is a very good opportunity to follow this market. So once a market has moved out from a peak formation zone or a peak reset zone, wait for a little reset. It doesn't always need to complete an MW, M pattern or W pattern for you to enter, because it's simple retest and then it moves away with speed from that particular point. Let me check for other charts so I can understand it better. Now look at this. Look at this particular peak reset here, or peak formation as the case may be. Now look at it. A retest, a slight retest occurred here. Let me try to zoom in so you see what I'm talking about. Look at a little retest that happened here. Look at the retest before you see your ID50 trade. Look at ID50 and look at your retest. So always ensure that you wait for that particular retest. If you are not able to follow the peak formation zone, if you don't have the nerves to take that peak formation, wait for a retest. Don't just jump into the market without waiting or without proper confirmation. Now after this a little retest, it now gave you your ID50 and then a peak, a turn or a pullback or a peak reset as the case may be, before it now start going up again. So this type of things occur continuously in the market. Look at another retest. Look at plenty retests. Let me remove this red. Now this market has moved out on the peak reset and then this retest occurred and then before it moves down again. So you only need to understand, not to say that this is the only way to trade the market, but for a beginner, or if you don't have enough experience in the market, these patterns will guide you while you get better, and then you can make decisions using other information you have acquired. So guys, this is some of the things you know, and if you are able to understand these things, if you are able to understand these patterns that occurs in the market, you'll be able to profit massively in the forex market. Please guys, subscribe to this video and then share this video. Thank you very much. We'll come again with another interesting information about profiting in the forex market. Thank you very much.